Good morning for a second time, Market Chameleons. This is Will McBride, joined by Dimitri Pargamonic and Jake Kilby. We will be having a webinar with Jake. Before we get started, Dee, how about we do the disclaimer? What do you think?
Yep, and I think Jake's about to join us. He has to unmute himself and
Yep, as he's unmuting and sharing his video, we will start with the disclaimer. What do you think?
Yep. So good morning, everyone. Before we get started, keep in mind, Will and I and Jake, Market Chameleon, we're not registered investment advisors or broker dealers. We're not telling you what to do. We're just sharing ideas today. If you need professional help, call your broker. That's what they're there for, to help answer your questions, provide you with guidance. There's the disclaimer.
Excellent. Now, before we get started, this is going to be a webinar led by Jake, who's one of our active Market Chameleon users, probably the longest time chameleon I'm aware of other than Dimitri and myself. He's been using it for years now, and he's been nice enough to start a Discord group that he and another very active chameleon, Raj, who does a show as well, monitor. Dimitri and I, other than participating occasionally on it, have nothing to do with that Discord group. And with that, it's been very active. And Jake, because of all his activity on that and his use of the chameleon, has been nice enough to say, I'll come on and show the chameleons how I use the chameleon, because everyone uses it a little bit different. So you'll hear the Discord mentioned, possibly. If you want a link to that Discord group, email me, williammcbride@gmail.com. You can put that either we're on YouTube in the YouTube chat, or we have 20 plus participants right now on the Zoom. You can put in this, I'll put it in the Zoom chat as well. And that is also where you'll ask questions for Jake or Dimitri or myself. With that, Jake, why don't you give us a little background of yourself, what you're about, and then you can start with the webinar when you want.
Yeah, sure. So my name's Jake. I've been a Market Chameleon user actively for about 4 years. Been in the equity game for about 20 and in the derivatives game for about 4. So since I've been using Market Chameleon, I trade a range of different securities, so to speak. So I'm not just a pure US equities or derivatives trader. I'm based in Southeast Asia, so in Malaysia. So I actually trade not only on the Australian market, but Hong Kong, Japan. In the afternoon, we have Europe, and then in the evening, we have the US. So the US is pretty broad and diversified, and it's pretty cool to be able to get risk exposure there as well.
Excellent.
So I'll just share my screen, yeah?
Yeah, share your screen and get started.
Yeah, okay. Thanks, Jake.
Stand by. Let me hang on, share. Okay, guys.
So Jake's sharing that. Any questions, just make sure you pop it into the chat, and I will try to get them in front of Jake or Dimitri as we move forward. Everything's looking good, Jake. It's showing up.
Okay, cool. Let's rock. So I've kind of called this first call. I guess I kind of should have called it covered call, because that's kind of the first thing I want to show you guys today. And what we're going to look at really is a range of things. So combining Market Chameleon platform with a live trading platform. I use Interactive Brokers. You guys can use a range of other brokerages. So it's not really to sponsor any particular brokerage. It's just because that's the brokerage I use. But before we get started, kind of thing, and this is really important, is the IPS, right? So you guys who are watching, you all are different from different backgrounds. You have, different objectives and the like. And that's really important to take into account. So what I'm showing you here today really is for educational purposes. It's not a recommendation to take a covered call out or to buy SPY or whatever. It's just to give you a practical idea of how you can link the Chameleon platform with a brokerage account, right? And it's really important, right? Because particularly for our US viewers, tax considerations is critical. On a covered call, if you actually get your stock called away from you, that could be a capital gain, and therefore you're actually liable for tax. And another one which is really important is risk tolerance and appetite, right? Certain people have high risk tolerance and low risk appetite. These are the guys with $5-10 million who have just fixed income and don't want to take a lot of risk, but they could if they wanted to. And then there are guys who have low risk tolerance and high risk appetite. And these are the guys with small brokerage accounts who are, taking leverage positions on penny stocks and the like. So it's really important to have some form of strategy before you dive into any form of investing, trading, or managing money in general. Okay, so here are the objectives. This is what I'm trying to do. So I'm going to show you as we go past the presentation, get on the Chameleon, get on TWS, and show how the two marry together. And as time goes on, I think I'll make an appearance every 15 days or so just to look at what we've done, look at the positions, manage them effectively, close them and the like, and even comment on what went well or what didn't go so well. We're going to record the results, and then really key takeaways, and experience sharing are pretty critical for me. And this is what we do on the Discord, I would say, on a day-to-day basis. So you guys who aren't on the Discord, I invite you to get the link, join up. We've got some really active traders, and I think it's a really rich experience because we've got guys doing different things. We've got guys who are focused purely on earnings plays. We've got guys who do a bit of everything, etc. So it's a real good tool and a platform to share experience and then take away lessons learned as well. Really positive. So Market Chameleon, look, there are tons of possibilities and there are loads of things you can trade. You can trade corporate events such as these, and I'll show you as time goes on where you can find these. One which is great, which we see with Dimitri on a regular basis, is he goes through a review of what's happening pre-market. And often on the pre-market, you can actually establish setups just before the open to try and capitalize on different price action. Then there's long-term strategy plays. So if you think commodities are going to go up or whatever, you can take risk exposure to commodities, the dollar, the yen, whatever it may be. So the range of things you can do. Earnings is another one, and I kind of spoke about this a bit earlier. We've got Raj, Jagan, Momo, and the crew on a day-to-day basis, pretty much doing, I would say, detailed research on earnings setups, and then giving inputs and ideas and so forth. And that's really cool because, you can be bullish or bearish on a position. And then if you actually share it on the Discord, you'll get someone to say, no, I'm going to take the opposite side of the trade. And this is the reason why. So it can actually get you thinking constructively and critically on different positions. And here in the community, we'll see this as time goes on. But, an earnings play is looking at price action over a punctual event earnings, and then looking at effectively what the options prices are implying as a move and what has historically happened, and then taking a position to try a short-term position to try and capitalize on that.
So Jake, not to interrupt, but I will interrupt. Sure. You mentioned a couple names. I guess those are the names of the individuals on the Discord who are pretty much into the earnings plays.
Yeah, these are guys I chat with on a day-to-day basis. This is Raj, who you guys have seen and who's presented, I think, on 1 or 2 occasions, done some great stuff on payoff diagrams. We've got Jagan, we've got Momo, we've got the greatest out there from Texas. So we've got a range of guys, and look, I enjoy engaging with them on a day-to-day basis, and hopefully we can get more people on there sharing their thoughts, their opinions, and so forth. And I think the important thing with the Discord is it's okay to have a different opinion, right? And that's the whole purpose of it, is that you go out there and I can say, hey, I'm bullish commodities. And then one of the guys can say, I don't think so for this reason or whatever. And that can really get you thinking about, your own decision and so forth. So I think it's pretty rich.
Great.
Okay, so this is trading style. I'm just going to change this up a bit in real time, guys. This is my trading style. So this is me. Take it and take what you like or what you don't like, but this is how I operate on a day-to-day basis. A couple of key things. I'd say, first of all things equal, I prefer having cash in my pocket than dispersing cash. And what I mean by that is, if I'm bullish on a position, I'm going to take a credit spread on the put side more so than a debit spread on the call side. And that really implies leverage, which is okay for me. And my IPS, like I mentioned to you guys, it may not be suitable for everybody. But in general, from a cash or a money management perspective, certain brokerage accounts give interest on cash positive balances. I prefer having cash inflows than cash outflows. Another thing which I think is pretty important, I've mentioned on the Discord on multiple occasions, is you're never going to lose money when you don't get filled on when opening a position. And what I mean by that is, I'll give you an example. Maybe on one session in, one US session, I will maybe open 5 positions. And of those 5, between 5 and 10 positions, of those 5 and 10 positions, 3 of them might have been plays I found off the Discord with the guys that I've kind of gotten involved in or whatever. But maybe only 2 of those will fill, or even 1 will fill, sometimes none fill. And what I'm trying to get at here, guys, is don't rush, be patient. It's okay not to get filled. Use limit orders as opposed to market orders in general. take your time. Tomorrow, Market Chameleon will be there. Tomorrow, hopefully, the guys in the Discord will still be developing ideas, doing the research and stuff that they do. And in general, there'll still be a market tomorrow. So don't rush positions. I think when you, at least with my personal experience, when I've rushed, I've crossed the streams, as they say in Ghostbusters, gotten filled on market orders in bad conditions, lost money and the like. So take your time and be patient. The other thing which I think is kind of important is, look, I can't tell you guys if tonight the market's going to go up, down, sideways, or whatever. But one thing I can say is that the passage of time will move forward, so to speak. And that's really important. And what I mean by that is the whole principle around theta, right? Now, theta, or time decay, as a lot of you guys know, it's not linear, right? So when you have time decay on an option, it doesn't go like that. It actually moves quite slowly initially. So you'll have an initial move, maybe 90 days out, it'll be pretty slow, etc. And then it'll be pretty much exponential. Now, why is that important? Well, that's important as a rule of thumb, at least for me, when I actually develop positions, because here, in this kind of window here, and that might be between 1 week and 15 days max, I kind of want to be a seller of options, right? Whereas here, on where theta decay isn't important for me personally, I kind of want to be a buyer of options. Now, that's important because if you're looking to protect a portfolio, sometimes, let's say you want to buy a put on SPY to protect, maybe you're holding the ETF and you want to protect your gains. Well, if you want 30 days protection, often it's better to buy 60 days out, let those 30 days decay, and then sell your option for a loss rather than take the full hit on the actual time decay. So that's a pretty important point as well. You don't have to make money the same way you lose it. Now, this is something that my finance professor used to say to me, and I never used to figure it out, and I couldn't quite get it. And what I'm trying to get at here is it's important to understand the aggregate value of your basket of securities or the money you're managing, and less so an individual position. So it is important, obviously, to track your individual positions, etc., risk manage effectively. But what you need to be looking at is the delta exposure or the directional exposure of the entire basket of securities. So there's no point, I remember years back, I used to track my gains on a weekly basis. And I used to be proud of myself because I was like, yay, I made maybe $5,000 or whatever. But if I've lost $20,000 on the underlying securities I'm holding and I've made 5 on the options, what's the point, right? So that's really important. Understand the aggregate value of the basket of securities or the portfolio that you're holding. Right tools for the right job. This is a classic, things such as illiquid securities. No point in doing complex positions on super liquid securities. An example is Biogen. Things like iron condors where you've got 4 legs, or iron butterflies, and you're trying to get filled where you've got huge spreads. It's going to be very difficult to get a fill, and then it's also going to be very difficult to exit a position. So these are kinds of things. Another example is shorting things such as dividend or income paying ETFs. SDIV is a perfect example. It's a monthly dividend paying ETF. These are not the kinds of things that you short, because you're going to end up paying the dividend on a regular basis. It's going to eat away at your gains. So that's really important as well. Then these things here I've got here are pretty basic, right? So compounding strategic holdings, everybody knows that. If you hold like Apple and you like Apple, well, then when you get a dividend, think about reinvesting that dividend, right? And compounding on those gains. Short positions, and we're not going to really we'll do a short call for a covered call position today, but definitely short positions and naked positions, which we won't do today. If you're going to roll them, only roll them for a credit, because if you're rolling them for a debit, it's like throwing good money after bad. And then last but not least, managing and measuring, right? So you need to manage your risk and you need to measure on a regular basis. Now, before I dive into TWS, I've just got a screenshot here of the actual options chain and you'll see this in a minute in real time. But before I do this, I just kind of want to give you guys a bit of particularly for the newbies, a bit of an overview of what that looks like, right? So here we have the strikes, and it's kind of counterintuitive, but as the stock price moves up, this actually goes down. On the left-hand side, we have calls, right? And on the right-hand side, we have puts. Really important here that you guys look at delta, because this is what we're going to speak about later on or during the course of this session, the deltas on the options. Now, basically, the blue line here, you'll see it on the Market Chameleon as well, this is at the money. So we call this at the money, right? on both the call and the put side. On the call side, we're out of the money here. You can see that. We're in the money here, right? And the opposite can be said on the put side, right? So here on the puts, on long puts, we're out of the money, and here we're in the money, okay? Now, what I'm trying to get at here is I kind of want to speak about delta. You know, we don't do too much on the Greeks, but this is kind of what I want to explain today because it's very much linked to covered calls. So delta, as you can see here, describes the change in value of an option. So for a $1 change in the value of the underlying, it's important that you understand that it's dynamic. So here, you know, all my deltas messed up because I took this screenshot earlier today when the market was closed. But what you'll find with at the money delta, it's approximately 0.5. So just keep that in your mind. It's about 50 deltas at the money. And it's often also, I think we heard Dimitri speak about this earlier today, it's often used as a proxy. It's not a great proxy, but a proxy for probabilities of a position expiring in or out of the money, right? So if I buy a call at the money, so it was the 416 strike here, so to speak, there's a 50-50 chance of this expiring in the money. Whereas here, look at the deltas here, we're almost at 1, right? So 0.99. There's a much greater chance of my call, so to speak, expiring in the money here than, for example, way out here. Okay, just some housekeeping again for the newbies. It sounds kind of basic, but you know, I was confused about this when I started. You know, there's a whole jargon around trading and derivatives and the like, and you may not be familiarized with the language. So 100 shares or 100 shares, you're long, right? So you have a delta exposure of 100, positive 100, right? So as the market moves up, your position moves up effectively. If you sell 100 shares, you're short, and therefore you're short 100 deltas, right? So if I took the quantum, right, or the total of these two, they kind of offset, right? So if I had a long position and then I had the equivalent in options which cancel that out, I would effectively be completely hedged. Okay. So just to give you guys an example, and I can't quite see it actually with the zoom, but buying a call is taking on positive delta, selling is taking on negative delta. So when you buy an at the money call, you're effectively taking on 50 delta. So if you take the positive sign here for buying, multiplied by the delta exposure, you've essentially got, at least at that punctual time, exposure which is equivalent to 50 shares. Okay. Now, if you do the same thing, but this time you buy 2 at the money calls, you're going to actually have, obviously there's 2 contracts, so 2 times 100, 200. Again, we're buying, so there's no negative sign there. We're buying. Again, here deltas are positive because we're in the call side. It's the same. It's effectively the same as having directional exposure of 100 shares. Now, it's a really important point because one thing I missed when I started out was look at the put side. The put side is negative, so the deltas are negative. So if you kind of translate that there, and again, I'm speaking about the aggregate deltas of your position. If you buy 100 shares of SPY, you're long effectively 100 shares, etc. If you buy 2 at the money puts, right? Again, we're buying, right? So 200 buy. Now here, when you can't see it here because this is not correct, but I'll show you in real time in a minute, and we'll have a look at it. This is about 0.5. So you've got 200 times negative 0.5. It's almost the same as being short 100 shares. So here the total position would be plus 100 shares minus 100 shares equals 0. Your position at that time is hedged to 0. But be careful, right? And this is really a really important point. Delta is dynamic, and we're going to see this when I jump on the platform. You'll see the deltas moving as the underlying moves as well. So last but not least, before we dive on, we're going to get into a covered call. I thought, let's start with something which is pretty elementary. And that's a combination of 2 things, right? And I want to give you that idea or that overview of delta exposure. So a covered call is made up of 100 shares, right? Sorry about my writing. So 100 shares or 100 deltas. So it's that, and it's also selling. So when we sell, we take on negative delta exposure. We sell 1 contract at the money, right? So that minus 1 or minus 100, so to speak, is, here we've got plus 100. Here we've got minus 50. So basically by combining the two positions, we have a net delta position of 50. Now this is really important, excuse me, because if we only had 100 shares, right, and we did nothing, we didn't sell a call or anything like that, we would have essentially positive 100, right? So if you look, and I think Raj did a great, and we'll probably see this a bit more often as we move forward, but Raj did a great overview of payoff diagrams. If you look here, now this is my very bad payoff diagram, positive is for a cash inflow, negative is for a cash outflow. Now the payoff for 100 shares looks pretty much like this, okay? So as the stock moves, as the price moves up, the value of your option, sorry, the value of your equity moves up. And as it moves down, which is this way, the value moves down. You can see here in the negative, right? So that's basically the payoff diagram of 100 shares or a synthetic stock. Now, if we actually sell the call, again, this time payoff diagram, we've got, these are our 100 shares. Sorry, my drawing's really bad. But what we've got on top of that is we've got a call which we're going to sell. So when you sell a call, you take a cash inflow, but your gains are limited to the amount at which you sell the call. So let's say you sell the call for 20 bucks or whatever that may be, or 5 bucks, whatever. Well, your gains are going to be limited beyond this point. So beyond this point, the stock is going to be called away from you. So what happens is you're actually changing the actual position altogether. The combined position, you're now limiting your gains, and in exchange for limiting your gains, you're getting a regular income stream as opposed to what we have here, okay? So all in all, that gives you a bit of an overview of delta in relation to a payoff diagram and how that works. So without further ado, let's just dive in to this is what we've got, right? So this is TWS. This is a simulator. Not unlike what you'd see on a real account. I've got a real account which I use on a day-to-day basis. If anyone's asking why the monetary value, that's just kind of what you get as a default from Interactive Brokers. I lost $7 the other day when I was trialing this out with Will and D. But yeah, we started with $1 million. Now what we're going to do today is we're going to put into action that covered call strategy. So let's have a look on.
You know, Jake, I'm not seeing the Interactive Brokers platform. Are you, D?
No, I'm not seeing it. I'm still seeing the payoff diagram, Jake.
Yes, as am I. You may want to click back on it.
Strange. Okay.
Yeah, I don't think you switch screens to the Interactive Broker.
Let me just exit this. Okay, let's just discard this. Oh. Screen sharing is stopped. Okay, stand by. Let me just.
No worries. No worries.
Yeah.
D, that was a great show this morning. What do you think of taking the live questions? Was that
Yeah, no, I thought it was very interesting because we're used to taking questions just on the chat, but it's nice to hear somebody's voice on the other.
Awesome.
You know,
maybe we're not going to do that the first time with Jake. But maybe going down the road, we'll allow Market Chameleons to come on and actually interact live with Jake, Dimitri, and myself. But there it is. It looks good, Jake. It's up.
Okay, so here we have TWS. Okay, so here you can see at the top, it's a paper trading account. This is a simulator. And what we're going to do is we're going to link this to the Market Chameleon, and we're just going to do a simple covered call. So before we dive into TWS, a couple of things. So we've got, this is Microsoft, and you can see it's moving in real time, 44 basis points up. If we look at SPY, this is what we're going to work on because it's probably the most liquid of the ETFs. It tracks the 500 largest publicly listed US companies. So we've got SPY here in the price section, so $418 for 100 shares. Here we have, remember I spoke to you guys about, and we saw it on my presentation, we spoke about the options chain, right? And it's pretty much the same thing, except this is dynamic. So here we've got the strikes, left-hand side, we've got the calls, right-hand side, we've got the puts. Look at the deltas. So like I mentioned to you before, what are we at? We're at 418.74, about 419. If you click on 419, sorry, let me just clear these legs. If you click on 419 here, we've got delta exposure of 0.495, right? So this is, and same on the put side, so it's minus 0.504. So as I mentioned, at the money, you're pretty much at 50 deltas, so to speak. So let's click on to Market Chameleon. Hopefully you guys are going to see this. Stand by. Can you see that screen? Yep, we can see the Market Chameleon.
Yeah, Jake, we see it's on the Market
looks
Chameleon
good.
screen.
Sorry about that.
Okay. One of the first things that I do when I dive in after watching the pre-market show is I have a look at, and this is pretty cool, I have a look at a snapshot of what's happening in terms of asset classes. And here, you've got a bit of an overview of SPY, and then you've got all the main ETFs around, whether they're technology, basic materials, industrials, etc. And the other thing I look at here is volatility, because that gives you an idea of whether I want to be a seller of options or a buyer of options. Now, today we're just going to set up an at the money covered call on SPY. So no real need to dive into the screener, but I can if I want to, and I'm just going to show you a brief overview. So here, if you're interested in a basket of different securities, you've got your expirations. We're going to look for the next 30 to 14, well, between 2 weeks to a month, because that's going to be the time frame in which I present next. And so I'm going to be pretty wide in terms of what I choose. You can, you've got presets here which are kind of cool and so forth. I don't really need any of that because I'm just going SPY, right? So just hit SPY down here, and then it gives me basically a whole range of different positions on SPY with different expirations, so time to expiration, and then the deltas, right? This is what we spoke about before at the money. And it's kind of interesting if you actually just click on this. So if you click on the win rate for the covered call, you have changes in the delta which are corresponding to where they're positioned on the options chain, so to speak. So I'll just click on one just to give you an idea, just to show you the payoff diagram of what a covered call looks like before I dive in. So let's go 15. What are 15 days out? Is that 15? So we're going to sell. We're at the money 418. So if we sell at 418, we're going to buy 100 shares. So I can just put that in here. Good strategy. And what you're going to see down here, well, exactly. Sorry, my stock range isn't. It's not as clear, but what you see essentially is that diagram that I showed you before. So as the value of the underlying moves down, my ETF will lose value, and I'm limited. My upside gains are limited as well. So I don't. Sorry, let me just see if I can get a better visual on that. But that's pretty much it. So there's the current spot, 418. That's the maximum I can earn, which is $77 for selling an at the money call. So let's go and try and replicate that now on Interactive Brokers before we close. So we're at like 418, 419. So what I'm going to do here, again on the call side, you've got buy and sell. So let me just clear this. So we're going to sell the 419. Now, like I mentioned to you guys, what I recommend is limit orders, not market orders, and to wait your time out. But in the interest of this show, I'm just going to try and and because SPY is a relatively liquid tool, asset anyway, I'm going to try and get a fairly rapid fill. So we can just go, you can see the spread is pretty minimal here. So $400. So we're going to go in between. So if we hit sell here, so there we go, $416 US, shows the initial margin and the maintenance margin I take on. If I transmit that, I should go, there we go, I've got a fill there for $418. Now I need to cover myself, right? Because right now I'm naked. So we're gonna buy 100 shares at $418.95, $41,000. Again, this isn't something I would naturally do. I would probably use a synthetic because I generally use more leverage than probably the average person, but just to give you guys an overview. So right now, and we'll come back in 2 weeks' time, we've got, see the negative number? That means we've sold. So we've sold a 419 call, and I bought 100 shares at just a little under 418.927. And that's pretty much it for today. So my suggestion is I'll probably post how positions are managed, etc. But we'll come back maybe in 2 weeks and see how we go, whether we've been assigned, whether we need to manage that position or whatever. And that's a wrap.
Wow, Jake, that was awesome. A lot of great comments in the chat. Everyone was so excited to see the doc. Well, actually, they've seen your picture before because you have a great piece on Seeking Alpha. So everyone's seen you. But to see you live behind the Fed, are you going in to give a presentation at the Fed later today? What's going on?
Yeah, no, I'm passionate about monetary policy, but not one of the guys.
Well, that can be another show. So we'll see you in 2 weeks, I guess. You'll give me the date, and I'll let the chameleons know. I think it's interesting doing it on a Monday, start of the week. Maybe we'll make it in two Mondays, something like that. But great job, Jake. It was awesome.
Thank you, Jake. Yeah, and what this does, Jake, is it just keeps track of it as you go and see how this this trade has over time, how it's progressed over time.
Well, sorry, Dimitri, one thing I didn't mention, which I do on a regular basis, I've kind of set it up here and I'll update this after we close the show, but I kind of keep a regular track of all my positions, right? So things such as I on a day-to-day basis, I keep a track of margin. That's really important for me. And then there are a range of things that I've shared indifferently before in the past. I used to print this out on a Sunday night, and I'd go through the Market Chameleon and I'd write down earnings plays that I thought were useful and so forth, etc. And then I have a little bit of a delta tracker. So this is something that I'll share with you guys as we move forward.
That's awesome. All right. Well, thank you, Jake. That was a great presentation. I thought it was very good. I'm kind of jealous. I have to.
It was a great job, Jake, and I particularly the fact that you've only Dimitri and I have been on previously, my brother, obviously from Costa Rica, but we all grew up in the Northeast. To hear someone who, and I don't know your full background, but you sound so damn interesting. I don't know if you work for the CIA, for the Royal Navy, for some sort of secret agent, what you're doing over there in Malaysia, but it's a wonderful thing you're doing for the chameleon community. And the Discord is, I know, used by so many people. Again, you can email me. I put the link in both the YouTube and on the Zoom. My email, williammcbride@gmail.com. If you want to link to the Discord, which Raj is involved, Jake, Gene, the doctor, Mike, I mean, so many of the chameleons, you can get on that. Dimitri and I are on occasionally, but it is strictly run by chameleons for chameleons to discuss trading ideas and investing ideas. So, Doctor, thanks for everything. We'll see you in 2 weeks and hear from you on the Discord.
Thanks,
Jake.
No
problem.
Thanks, everyone.
All right, everyone, have a great trade, and we'll see you tomorrow on the pre-market show. Thanks again, Doctor.
See you later.
See you later. Bye-bye.